Hello, and welcome to myfinanceteacher.org. There's been a question on GDXJ versus gold from one of the viewers on YouTube, so let's have a look at that. The question was basically that due to the big divergence, big underperformance in GDXJ versus gold, perhaps it's time to go quote-unquote all in, buy calls. So do we want to jump in nose deep into GDXJ right now? Well, let's have a look at history and see what correlations between GDXJ and gold price tell us. At the bottom of the chart here, you see the 10-day correlation coefficient, and the top half of the chart is a gold price in gold color, a GDXJ in blue color. Looking at the 10-day correlation, a negative correlation took place a few times since late 2018. So let's recap the history here. In late 2018, the negative spike in this correlation took place just before gold price dipped a little bit before continuing the rally of the intermediate cycle. And just after this negative spike, GDXJ dropped noticeably as well before again continuing that rally into the intermediate cycle. Another negative spike took place in early 2019, and that was actually very close to a short-term temporary low both on gold and GDXJ. That short-term temporary low came just a few days after that spike, and that was actually a pretty good entry point into GDXJ, but for a relatively short term into the mid of that intermediate cycle, into that intermediate cycle top. Another negative spike took place in the second half of 2019. That was actually very close to the intermediate cycle top over here. So although there was a short-term temporary bounce up in GDX and in gold over the next few days, a couple of weeks after this negative spike, generally the intermediate cycle was already topping at that time, and gold as well as miners were getting ready to drop into the intermediate cycle low over the next several weeks, over the next few months. Another negative spike in early 2020, and again, temporarily that was an interesting entry point over here as GDXJ increased a little bit higher into the top of that intermediate cycle. So yeah, perhaps that was a time for a short-term entry over here. But still, the level of entry over here is not extremely different from that of the intermediate cycle top. The gains are relatively modest compared to the lows from the intermediate cycle low. And several weeks after this negative spike, gold and miners dropped into this severe intermediate cycle low in March 2020 with the pandemic scaring all of the markets. And what we see right now is another negative spike over here, and perhaps this negative spike is somewhat different from the previous 4 negative spikes, as right now, over the last several weeks, you clearly see quite a divergence between gold and miners. Gold generally trends higher over the last few weeks, whereas miners just keep dropping over here. And at the time of the previous 4 negative spikes, we didn't really see much of such divergence. We see gold and miners, although slightly shifted, generally moving up and down together. So whether this time things are different, whether history doesn't have anything to teach us right now, it's still questionable. But it seems to me, if we do have history to consider here, perhaps you want to be a little bit cautious, perhaps you want to see what happens to the ongoing short-term daily cycle. Is this daily cycle in gold going to drop down into the intermediate cycle over the next few weeks, or the daily cycle decline is going to be modest, and after that gold continues into a new ongoing intermediate cycle? This, as I mentioned in my previous gold-related video, is the main question right now. And since that recent gold-related video, my position hasn't changed. I think there is, well, say perhaps 55–60% chance that gold is going to drop down into the intermediate cycle low. That's based on the cycle duration. If we are in a new cycle already, the previous cycle finishing with this double bottom would be a little bit unusually short. But there is still a pretty good chance, perhaps around 40 to 45% chance that, yeah, well, the previous intermediate cycle was kind of unusually short and we're already in a new intermediate cycle. In which case, buying miners right now would be a very good idea. Let's also have a look at this correlation between gold and miners, but instead looking at GDX rather than GDXJ. Here it is, GDX versus gold. And historically, we see the same 4 negative spikes over here, but at the moment, at least on the 10-day correlation coefficient, we don't see a negative spike. We see that GDX has actually done a little bit better than GDXJ. While GDXJ dropped quite significantly over the last few weeks, GDX has generally been kind of going sideways, while gold was generally moving upwards over the last few weeks. So as I already mentioned a few times, I already have a quarter of my portfolio allocated to precious metals. That's close to the maximum I want to have, as the other 3 quarters are set aside for cryptos, energy, and the general stock market. But if I didn't have any allocation, for example, then I would definitely want to have at least some allocation. I would get in right now, but not all in, as one of you commented. I wouldn't jump nose in right now. I would definitely get a considerable allocation. Perhaps 20% of your gold-related side of the portfolio, in which case if gold is a quarter of my portfolio, 20% of that is around 5% of the total portfolio. And with the rest of the cash, I would see what happens to gold. If it holds above 1800, that would be a positive sign. So let's keep our fingers crossed for that. And another thing that I will keep my fingers crossed for is for you to hit that like button. Have a nice day and good luck in your trades.